Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Welcome, ladies and gentlemen, back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown here to help guide us all in a very hectic market this week. AJ, Sunday night, I saw Japan down 10%, and I feel like that started a big whirlwind of what this week looks like. What are you seeing on your end? How does the week panning out? We've been looking for this pullback. It's finally here.
Yeah. First of all, I'd like everybody to be introduced to Babyface Brown, because that's what happens when I shave off my beard. So,
Get
hey,
a close-up of that. Babyface Brown.
Babyface Brown. Okay, so Japan. So there was this thing going on, and it's a big deal, right? So it's called the carry trade, or the unwinding of the carry trade. So in Japan, their central bank, the Bank of Japan, did something that our central bank has vowed that they would only do as a last resort, and they made negative interest rates. Our central bank went as far as finding a different mechanism, this whole thing called quantitative easing and quantitative tightening that we're talking about, to help control our piece of the puzzle, our economy. But a lot of central banks do this thing called negative interest rates. If you can believe it, in those countries, they want you to use your money so badly that if you wanted to save your money in a bank, you would have to pay the bank instead of the bank paying you, right? Because when there's positive interest rates, that means that you could put your money into a risk-free place like a bank, and the bank would pay you some sort of interest every year for you storing their money there. But when an economy decides to use negative interest rates, if you wanted to save your money, you'd actually have to pay the bank to store your money. What does that mean? It also means that banks were trying to get people to spend their money, so much so that they were making it really inexpensive to borrow money. Like money was basically free to use and borrow with collateral. So here's what people were doing. They were going over to Japan, borrowing all this free money, this low interest money, and even paying the conversion to US dollars, and then coming back and buying things like Nvidia, things like Apple, things like Microsoft. In other words, they were playing the spread game. They were using the Bank of Japan's money and buying assets here that up until recently seemed like they were good deals, like there was no way you could go wrong. And so you were getting all this free money, buying these assets, and then keeping all the gains that you make, as you return that money. Well, as you know, a lot of that has been unwinding. And the Bank of Japan also said, hey, we might start raising interest rates. We might start making it more expensive to borrow money. They have pledged later in the week to kind of hold off on that. But in the beginning of the week, they were like, hey, we're going to start raising interest rates and not making our money so free. So the combination of these big flying stocks that people were investing starting to actually sell off and not have as good a gains as they thought, and the combination that the Bank of Japan's money was not going to be free anymore, people started to unwind all of this. And of course, that made Japan sink. It made more of the trades here sink. It just creates this snowball effect. And that's what happened in the beginning of the week.
And it was a big unwind because
Yep.
I saw a graphic that said the VIX spiked to like its second highest level ever, which is a pretty big sign of something's going on, whether they want to point the finger at the carry trade or whatnot. That was a big jump. And, Monday I saw the NASDAQ move 1,000 points in one day. where do we want to begin on the charts? Do you want to check in on that VIX move? Because I know we've talked
Sure.
about it, but what does it actually look like? Wow, look at that.
Yeah. In fact, let us actually look at real history here. So let's go all the way back to since the VIX was started. And so, yeah, it's the biggest one, of course, was in 1987, right? Black Friday, Black Thursday, when the biggest sell-off in history, not including, the New York Stock Exchange collapse in the Great Depression. But since then, 1987 was a big deal. This is the .com. Oh, no, this is the Great Recession. Even the .com bust looks like nothing, doesn't it? The Great Recession. This was COVID, and then you've got us. So I'd put us in the top 5, maybe even the top 4 for spikes in the VIX. But it just goes to show that I always compare it to a pressure cooker. If you put somebody into a room in the beginning, like in the first half hour that you put somebody in a very quiet room, things are fine. They may even be enjoying the break from everyday life. Come back in a day and you'll notice that that person's starting to get antsy. They don't know what's happening in the real world. They were, wanting to get news, wanting to get feedback. What's going on in the big world? What's going on with my family, my friends, my coworkers, my job? Come back in a week and they start to get really, really antsy, right? They're tired of this break, right? They want to get back into the bustle. They want news. And, in that first half hour, if you gave them any sort of news, they would take it in stride. But after a week or even a month in solitary, if you give that person any sort of either positive or negative news, their reaction is going to be, out of this world because they just haven't had any insight. Nobody's told them anything. The longer you make somebody wait for news, the more they're going to react. Well, that's what we're seeing here, right? Because this week, if I look at the S&P, my favorite index to kind of get an idea what the broad market's doing, and I come back over here to just a daily chart, maybe a 6-month daily chart. The scoop is this week, we got very little economic news. So it's like investors are in a big echo chamber, right? And the littlest hint of negative news causes selling. And then the next day, there's extremes amount of bargain buying. And then the next day, there's more selling, right? It's like the needle kept swinging back and forth. And it's just because there's no guidance this week. Now, next week, if you take a look at my economic calendar, if I go to next week, what we're going to notice is there's some big things like, for instance, the consumer price index. And I think a lot of people are going to be looking at retail sales, right? They want to know that the consumer out there is still going to prop up the market, right? That's one of the things we've been counting on, is the fact that consumers keep buying even as things slow down. So I think a lot of people are going to be focused next week when we have our podcast. We'll have a lot to talk about, but I think people are focusing on this retail sales. Of course, they're going to look at this inflation number, but probably less than they have in the past weeks and months, because the Fed has already said they're having to change their attention from inflation to employment. So I think a lot of people are going to be looking here, and this will be one of those points that will cause either more buying or more selling.
Yeah, I was surprised with some of the news commentators coming on talking about a emergency Fed intervention
Yeah.
rate cut, right? Just because that Monday was a wild day, and I just want to pull up this quote here from Doug. He says he was a stockbroker in '87, followed by longest day of my life, and so that kudos to making it out of that. But Monday definitely was a wild day, and like you said, economic news is really being taken into context every day, because we had the initial claims yesterday that was a little improved versus the employment number Friday.
Last week, yeah.
And we had a pretty strong rally all day yesterday from that one news report.
Hey, let's take a look at what investors think about the interest rate drops coming up. So, September. So, yeah, there was talk on Monday of an emergency Fed meeting, and the Fed by Tuesday squashed that idea. They're like, one down day does not make a down market. Cool your jets. And since then, things, sentiment has moderated. Last week, there was like a 75% belief that the Fed was going to drop interest rates in September by 50 basis points. And you and I both talked about that being a kind of an over exaggeration. Well, you can see as of today, that's pretty much moderated. At this point now, it's kind of it's a little bit swayed more. I expect there to be more adjustment again, especially as news comes in. But right now, it's like a 50-50 chance, a little bit swayed more towards the 50 basis point. But we're going back to the belief that September will just be a quarter point rate drop. But interestingly enough, if we fast forward to the belief for November still factors in a 3/4 point rate drop. I keep saying hike, rate drop. And so they're saying, okay, maybe September we only have a quarter point, but somewhere in there might be a half point, at least as of now. But again, these numbers have been dropping and rebalancing as well. And then by December, last week we had seen that by December, a lot of investors were thinking about a 1.25 point rate drop for the year. Well, now it's back down to 1 point rate drop. And I wouldn't be surprised if when we actually see it all said and done, it's actually more going to be like a 1/2 to a 3/4 point rate drop for the year. Maybe one in September, maybe one in December, maybe one in November. But again, it does depend on the data. As the Fed always reminds us, they're very data driven.
Yeah, and I wouldn't be surprised if the inflation continues to stay rather high, because it has been for like 2, 3, 4 years now. I am curious to see where we did level off on the S&P in terms of your Fibonacci levels.
Yeah,
because we did find some support down there, and I know last week we talked about if we find ourselves in this middle area, we may be turning bearish for the rest of the year.
Yeah. So it's funny. I've been talking about this a lot this week. Now, we keep track of our closes. And so you can see here, if I overlay my drawing here, my basic drawing, you can see we were keeping track of where our highest close was. And once we get a confirmation, and I'm going to step back a little bit from my drawings here and go back. My confirmation, a lot of people say, how does that arrow get generated? Well, that arrow gets generated when you have a crossing of this 3-day and this 5-day exponential moving average. So the 3-day is represented by this light blue color. The 5-day is represented by this pink color. So when you get that crossing, and it can't be just like a 1-day crossing like we had here. It has to be a significant crossing, like a crossing that not only lasts for a few days, but also has some amplitude to it. And so that's how, in my little free indicators that anybody can go and download, this one is called the confirming indicator moving average, right? And you can see here, I've got my 3 and 5-day EMA. I've got that 1 bar reversal filter on, so it won't give us false answers. And here I've got this little thing on. This is more of a diagnostics thing, but it also helps you visualize. I was looking at the average line. So I was actually looking to see how close we are to getting a reversal. So you can see it is possible today, at the end of today's close, if we stay at the levels we are, if we don't go back down, we might get ourselves a reversal by the end of today. Now, my indicator may wait till the end of Monday because it wants to make sure this isn't one of those like 1 day echo chambers like we had back in July, this July 31st. So you may not get your arrow tonight. You may get it on Monday, so long as things stay and there's an honest to goodness good crossing. But if we did get a crossing, what that confirms for us is that this low that we had on Monday is our lowest low, and that this actually constitutes a reversal. I mean, we are seeing a reversal, but what we want to do is see a confirmation that we're done going down. We kind of got one of those reversals, like I said, at the end of July, but the confirmation never came. It was so weak, and sure enough, we wound up selling off again. I wouldn't doubt if that happens next week. We'll see when the news comes out. But we could also get a confirmation that our August 5th close was the reversal. So here, I keep track of that. I'll go back to my drawings here. I keep track of that by always looking at, there it is, the lowest low. So I have this line in yellow versus white because this has not yet confirmed, meaning it could still go lower if we have a lower close. But as of right now, we have pulled back. And if I zoom out a little bit, you can see we've pulled back pretty far. The last time we had a move, that move started at $5,235.48. We closed below the starting point of that previous move. In other words, we've pulled back farther than where we started. And so one other drawing that I always keep track of is I apply my rulers. And so you can see there's that line that we wound up crossing down. We didn't cross all the way down into this green zone down here, which would tell me that, oh gosh, we are starting to get an ideal downtrending expansion move. We're still in this red zone, which is more of kind of the sideways choppy type of move. And that's where it as of right now, we're probably going to stop. That just tells us that the market, yes, there's been a trend change, but it isn't a convincing trend change. It's basically we're entering into some sideways choppy trading.
And with that sideways choppy trading and increased movement, that is wonderful for your premium selling strategies, right? Does that make selling options contracts more valuable?
Well, not only that, you mentioned the VIX. So the VIX jumped up. It's come down off of those highs on Monday, but it's still quite high, right? Literally 2 or 3 weeks ago, we were pinned down at this $12 level. We're now up here at this like $22 level. We're literally around double the price of the VIX. And that's after coming off of the highs. What that means is that people have wanted to buy options, right? They're buying options. And why are they buying options? Because options can be used as hedges. They are insurance policies. So people want to insure their long-term trades. And so they're buying these options. Well, when you buy a bunch of options, when everybody is making a run on buying these options, the options become valuable. They go up in price. It's supply and demand, right? And so options have gone up in price. That means that us premium sellers, the ones who are now selling options, we're getting more than we usually do, right? It's all about, Sip, seeing what's happening in the market and putting yourself on the correct side of the transaction. So if people are buying and they're like rushing to buy, doesn't it make sense that you should be the one who's selling and selling at that extremely high price? And that's where we are. And yes, it's a premium seller's dream right now.
And even more so on the covered call side, right? In the
Hmm.
sense that it becomes like that monthly paycheck
Hmm.
that's now a little bit higher because
Uh-huh.
there's more demand for it, right? And so
Yep.
that's kind of the big premise behind a lot of what AJ teaches at Trading Trainer. So we do want to give everyone an opportunity to learn more about how to take advantage of a pullback like this in the market using these wonderful options tools and strategies. So AJ's got a wonderful daily workshop. The link to that is going to be in the chat. If you haven't checked it out, check it out. Also, we did throw the link to AJ's indicator in there as well, which is the red arrow and the green arrow. And as you can see in some of the examples, they were spot on there if you would have followed through with those. So get access to those. AJ, did you want to run through anything else before we move forward with the rest of the agenda?
No, I think that when we get into our discussion on our special segment, I'm going to nerd out on you a little bit, Sip. We're going to talk about dollar velocity and dollar acceleration. So I think we're ready.
All right. Well, we're going to take a break. Let everyone head on over there, sign up to grab that indicator, and grab access to the daily workshop. We're going to take a break. We'll be back and we'll talk about price velocity. I mean, I've seen a lot of price velocity this week. So let's get into the dirty on that. Sit tight, folks. We'll be right back.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. You know what I thought was funny this week was former President Trump calling the pullback on Monday the Kamala crash, right? I feel like every day if something's going on in the market is very easy to blame the politicians, and I don't think that's going to be going away. But we're not crashing anymore. The market is pulling back, but we are seeing a lot of movement. So AJ, what are you thinking in terms of how do we manage that as traders? How do we take advantage of that?
So a lot of people been asking me, "Hey AJ, how do you trade these very fast moves?" And I go back to something I've actually been teaching this premise almost 20 years now, and it's about measuring the price velocity and even the price acceleration. Now, gosh, that sounds like a lot, and it brings in like memories of the physics classes that we took in high school and in college. But I always tell people to think about the speedometer on their car. A lot of times your speedometer on your car, it's telling you that you're going, I don't know, 50 miles per hour, or if you're somewhere else in the world, it might say, 80 or 100 kilometers per hour. But if you think about it, if that device on your dashboard actually measured in hours, you would have to drive a whole hour for it to be able to tell you how fast you're driving. In reality, what this device does is it measures a distance that you've driven in a short amount of time, and then it extrapolates over the upcoming hour. It says if you keep at this speed that you're going right now, you'll be going 40 miles per hour or something like that. That's how those devices work. And so what we want to kind of understand is how much price action, how much movement in dollars, either buying or selling, is happening per hour, per half hour, per 18 minutes, per 12 minutes, right? Whatever it takes to get a good reading on the speed. Because if the speed of price action is a certain speed, it usually means that you can jump in on a trade. And so that's what a lot of people do. They'll actually set up a timer, just like a stopwatch, And on this timer, say for instance, they'll start the timer at 0, and then 30 minutes later, they'll identify, where price is. Let me stop my magic invisible ink here. If over that 30 minutes, if price dropped, say for instance, about 1%, that's a pretty big drop for price in a 30-minute time period. That might be worth jumping on a down trade. The speed is going quite quickly, right? So you could simply look at an open and a close 30 minutes later and kind of do the math, or let the computer do the math. And if it's more than 1% of the price action, that might be a signal to jump in on a trade, right? Another thing, though, that traders do simultaneously is they like to look at that price is kind of smooth, that it's not all over the place during that half hour. We call that smooth and consistent price movement. So, for instance, they'll look at 6 5-minute bars, right? 6 5-minute bars is a half hour. And they'll make sure that those 6 5-minute bars are smooth, instead of one bar here, one bar up here, one bar down, instead of zigzag. And so, along with just looking at the open and the close at the beginning and end of a half hour, they'll look at those 6 5-minute bars throughout and just make sure they're nice and smooth. Now, if you're automating this, because a lot of you I know like to automate your indicators, one thing that folks do, you guys, if you remember the term best fit trend line, drop a comment to whatever platform you're watching us on. Just say, I know about best fit trend lines. Even better, if you know about the statistical term for best fit trend line, otherwise known as linear regression, let me know in the comments if that's you, if you remember these terms. Because what you can actually do is program your software, your automatic trading software, to do a linear regression line on top of those 6 5-minute bars. And again, I just picked 30 minutes as a sample number. Some people use 3-minute bars. And so if you do 6 3-minute bars, you look at the beginning and the end of an 18-minute cycle. If you're using 2-minute bars and you're looking at 6 2-minute bars and doing a linear regression line on 2-minute bars, you might be looking at a 12-minute cycle. Whether you're looking over a hour, 30-minute, 18-minute, 12-minute, even 6-minute time frame, that's up to you and how you do your trading. But what I'm suggesting is you do one of these linear regression measurements, which that's built into a lot of our trading softwares. And even better, there's this thing called R squared. And I know I'm getting really nerdy here, but you'll find an indicator in almost every charting package called R squared. And what R squared does is it's a statistical measurement, and it measures how close are the bars to your linear regression line, to your best fit trend line. And if that R squared is high, like over 0.85, it means there's a good, smooth, and consistent price action in the direction you're going. So you get a combination of that high velocity move and that high R squared movement throughout, and that might be a good reversal signal. And when that's really a good reversal signal, Sip? I put him to sleep.
No, I'm here.
You know,
I don't know the answer.
It's the really good signal is right after you have you've hit up against a level of support or resistance. And you remember we had a guest on about 2 weeks ago. His name was Fausto, and Fausto was identifying these levels of support and resistance based on heavy order flow using NASDAQ level 4 data. if you hit one of those price levels that he identified, or if you're using traditional support and resistance like I do from historical highs and lows, you hit that level and then you notice velocity in the opposite direction. That's a great trading signal. Somebody asked me, how do you trade the VIX when it comes off of these days? And so I actually pulled up a 15-minute chart, but I'm actually going to go down. Check this out. I'm going to go down to, should we go to a 5-minute chart like we were talking about in our example?
I mean, if you can, is it possible to
Oh, absolutely.
trade the VIX in such increments?
Yeah, absolutely. So, what you would do is you would basically set up a timer and you would look over, and here, check this out. I can come over here to, and this is Thinkorswim, but pretty much every charting package, drawing package, look, RSQ there. Pop, pop. How cool is that? There's your R squared. We don't want to look over 14 bars. We want to look over 6 bars. So we'll change that 14 to a 6. And now, whenever that R squared is above about 0.85, here, I'll draw a line at 0.85. This is how you do it, guys, gals. Let's see. I got to learn how to use my drawing tool correctly. About 0.85. I'm going to approximate it here. There you go. Whenever the R squared is above 0.85 and you can measure that price action off of a level of resistance that is, going fast over those 6 bars, place a trade and then, ride it until you get a trailing stop, set a trailing stop. If you want to, you can use reverse velocity for your exit signal, or even more. And I'm not going to get too much into the math, but you could use reverse acceleration, right? Acceleration is when somebody all of a sudden slams on the brakes. That could be your exit signal. Play around with these ideas, but that's how you do these really fast trades with some methodology, with some actual thought behind it. And again, you can program these in. You don't have to be right there on the market. Just one thing that you have to think, 2 things that I would have you think about. Number one is these are kind of like risky trades. So I wouldn't invest any more than you're willing to lose. If you're willing to lose up to 4% of your portfolio on a single trade, don't make these trades any larger than 4% of your portfolio, because you could lose the whole thing. And you don't need to trade the VIX. You could leverage this. You could trade an option on the VIX. I would trade, in the money options, maybe 2 to 3 months out in order to get that intrinsic value move. But you could totally do this. The other thing I would suggest to you is, if you're not categorized as a pattern day trader by your broker, keep track of how many of these trades go through. I think that when you're not categorized as a pattern day trader, you could do, I think it's 3 or 4 of these a week. You'd have to go back and check. I've been a pattern day trader now for over 20 years, so I haven't looked at the criteria, but you don't want to cross that threshold unless your portfolio is big enough, to do unlimited day trades. You don't want to cross that threshold because your broker will hold you to a higher standard. They'll make you fund your portfolio more and a couple other things, unless you're ready for that. But this is a great way to do that. So pay attention to risk, pay attention to your number of day trades, but then go to town with this.
All right. Really interesting stuff there on velocity.
I had to nerd out.
And some statistical terms that I'm still over here Google searching the answers.
Yeah, R squared, linear regression. It's just automatic ways in order to program in the triggering of these trades. But you'll see, even if you program in your simulator, folks, to trade on 6 bars of R squared that's above 0.85 and price action that's like 1% of price action from the beginning and ending of that period, even if you program that in and run it on a day trader, I bet you'd have I wouldn't bet you. I mean, I'd bet you a lot because I've done this. You can see that your win-loss ratio is quite aggressive, and meaning you're going to get a lot of winners. You'll have some losers, but you'll get a lot of winners. And if you just do this a lot, you can program these type of volatile moves quite easily.
Well, that's why you're the expert, and that's why you've been successfully teaching newbies like myself and maybe some of the viewers these sophisticated strategies and giving us some insights into, how this investing world, very complex, fast moving, many options, not the contract, but many tools and formulas and strategies. So thank you, AJ. We appreciate that. We appreciate the knowledge and the lessons. And if you're not a member and some of this stuff is over your head, become a member, ask the questions, get the answers, so you're not over here, Google searching for hours on end. With that being said, AJ, let's get into what you're looking at, an opportunity where we could take this knowledge and apply it to a position. And I'm very interested about this week's pick of the week, an interesting name that we don't really run through too often or hear about on the financial networks, and that's Smith & Wesson, ticker symbol SWBI. This is the gun manufacturer, right?
It is. Let's go back to our 6-month daily chart. Now, speaking of this velocity, I would use this type of identification of reversal. Now, again, whether you identify support and resistance the more traditional way, like I do, where you just kind of eyeball it based on historical numbers. Let's see if I can get, there we go, something like this. Or if you're going to use something like, and I'm always blown away by the validation that that NASDAQ level 4 that Fausto was talking about gives you. But you identify a level of support and resistance, and then you look for that velocity and you look for that smooth and consistent price action. That's the signals I would use in order to sell premium on Smith & Wesson. We're right in the middle of the channel. And so right now you can go either way. But when we, or not when, but, or not if, but when we identify the next bottom or the next top, I mean, there's so much you could do here. The first thing you could do here is if you identify a bottom, we could start buying the stock or buying a bunch of calls that are far out in time, deep in the money. And that would prepare us, SIP, for selling call premium and buying protective puts every time we have a top. The alternative is if we get our top, we could short Smith & Wesson or buy some deep in the money, far out in time put options. And that would get us into a position where every time we're at the bottom, we could be selling put premium and buying protective calls. So these two thingies, these two ways of trading Smith & Wesson and using that acceleration move as your reversal, I think that is the trade for the week. Yeah, it's got good options. If you take a look over here at the option chain for Smith & Wesson, I mean, we could go out to March for our substitute options. I was looking at the March 21 put as a substitute for shorting the stock. So instead of shorting it at $14.83, I would go ahead and buy a back month deep in the money put option at $6.60. So that's about just under half the price. So that's a good one. If I was at the bottom and I was doing a call, I think I identified this $9 March call, again, going at about $6.20. That's way cheaper than $14.83. You get a little bit of leverage. You could do more trading. That's probably what I'd start out with.
Really nice price point on this. It's something that sticks out to me. And then I'm curious if this might get a little bit of action as we approach the presidential election as a gun topic, as one of those names that they throw around when they discuss gun policy, a little more so than now in the doldrums. So yeah, we'll keep an eye on Smith and Wesson. Nice little potential setups that you want to add to the watch list and see if it can trigger anything. So that's AJ's pick of the week. All right, we got 3 more names in our speed round. AJ, the people want to know what you think. And so let's start with Pam in Milwaukee, Wisconsin. She's interested in your take on Advanced Auto Parts, ticker symbol AAP.
First thing I'm going to do is I'm going to get rid of my R² indicator that I threw on there. All right, so, okay, I see what you're seeing here. Advanced, okay, it looks like Advanced is in a sideways channel that we might want to sell premium on. But here's what I want you to notice. I like to take a ratio of the width of the channel to its average height. So if we take a look at this, the channel is trading somewhere about 62.5 to 57.5. So that's a $5 width between support and resistance. The average height of this thing is right at $60. So $5 over $60. So I'm going to pull up my calculator and I'm going to calculate what that ratio of width to height is. So $5 divided by $60. Listen, that's an 8%, a little bit over an 8% ratio. What that tells me is that perhaps this isn't the best pattern to trade premium against. The number we're looking for is actually above 10%. In fact, 15, 20, 25, even 30% is better. When you get down this low, you start to ask yourself, is this really something that's sideways channeling, or is this something that's consolidating? When you get a low ratio between the width to the average height, you start to get into this thing where it's consolidating. And so that's what I think you're seeing here. This is a pattern that is getting smaller and smaller. And what that tells us is that the investors who are trading Advanced Auto Parts, they don't know whether to buy or sell. They're kind of in a holding pattern. And we talked about it in the beginning of the show. When you keep people in a holding pattern for too long, their reactions get amplified. And so they're sitting here for about a month and a half so far, haven't really done anything, sitting on the sidelines, getting antsy. Any little news is going to get amplified, and it's either going to cause some buying or selling. We don't know which way. We just know that, there's an earnings statement coming up here. And so their reactions are going to get amplified. And so I'd be nervous to sell premium against this, because remember, premium trades are called range-bound trades. You want the symbol to stay in a range, and that's what creates the ongoing income of a premium trade. Well, if this thing is threatening to go out of that range, then that's the last thing we want to do. In fact, what I would consider doing, since we've got earnings coming up in the next week or so, is I would start thinking about the possibility of a straddle strangle. So that's a trade that profits on price action going up or down, but not staying sideways. I would look at implied volatilities and see if I can do a trade with the option when it's at a high. People tend to buy options on a stock ahead of earnings, driving option prices up. So could you sell that option that people are buying and then buy it back when it's cheap again after the earnings has gone? So these are the type of trades. I'm always looking for the more predictable pattern. The predictable pattern here is probably that price is either going to go up or down. In other words, it's going to do anything but stay sideways. And the other predictable pattern is probably that they're going to be a buildup of implied volatility and then an abrupt drop once earnings is released. So how can we trade that? That's where I would leave you with that, Pam.
All right. Some examples are better setups than others. This is one that we would probably want to sit back and wait a little bit to see if
think about it differently for sure.
Correct. All right. Thanks for that, Pam. Moving on to our next name, which I'm very interested in because I heard it in the news all week. Candace from Tacoma, Washington is interested in Snap. Snapchat, ticker symbol SNAP. Crushed.
Crushed. Candace, are you thinking that Snapchat has a buying opportunity here? First of all, Snapchat, like Sip said, has been in the headlines this past week after selling off a good third of its valuation. And so that makes it one, if you're thinking premium trading or setting something up for premium trading, it makes it kind of we want this to mature. I was telling my program participants last night in our workshop that we like to sell premium on mature channels, and mature channels are where we've got a minimum of 2 tests of support and 2 tests of resistance, right? And so before I start wanting to trade Snap in the terms of being premium selling, I would let it mature down at this new level. I would make sure that this is truly the bottom and that we identify a top and we test them at least twice. But you're probably wondering, is this, a bargain? And I'm wondering if you've got my free indicator and you're getting this signal and you're saying, are we in it for a bargain? And so I want to tell you about the limitations of indicators. Indicators are all about identifying patterns that repeat themselves. And so when you see something like these crazy moves on news, like for instance, earnings statements and earnings releases, that's not a repeating predictable movement. And so anytime you get your indicator to give you a signal after one of these, and I've nicknamed these things transient external stochastic shocks. Once you get a transient external stochastic shock, you kind of have to let your indicators sound off for a second and not react to their signals, because their signals have a higher probability of being false. So a lot of word salad there, but my conclusion is let's let Snap simmer and mature at this new level before we think about even bargain buying on it. Because I'm afraid if you do bargain buying, that the Snap sellers may, decide to take it lower. So I don't want you to it's too risky, in my opinion, to just bet on Snap. Let's let it mature.
And as an advertiser and someone who's in social media, it's definitely not as popular and becoming less popular as time
every
passes.
day, it seems.
So, I think what's crazy is they were the inventors of the story. And then Facebook basically came around and was like, that's a great idea. We're going to add that to Instagram. And now that's a huge driver and everyone's left Snap. So we'll keep an eye on that. Not feeling too optimistic on my end from the technology. It looks like the earnings report wasn't too solid either. So hopefully that's helpful, Candace. All right. Moving on to our third and final name of our speed round. This is Tom in Raleigh, North Carolina. Interested in a name I'm not familiar with. Inovio Pharma, ticker symbol INO.
I like the pattern. I wish that
price too.
Yeah, I like the price too. It's affordable. I wish that this company made money, but you know what? I have done trades on pharma companies. A lot of pharma companies, especially ones that are in cutting edge, they run for years until their medicine is finally approved. And then, that's when they finally get the payback. So they're in it for the long term. So I'm less concerned about, their earnings here. But again, I am attracted to more you know, companies that have been around for a while will be around for a while. They make profits. They just work in the background. But okay, enough of that. Hey, my MACD, my fast MACD is really giving good signals here. Every time there's a top, my fast MACD comes in. There's some reversal signals there that get caught out. There's a bottom. There's a top. Yeah, my fast MACD indicator, that's my free indicator. That's this one over here that I've got that's called Confirming Indicator MACD. And I do a little something special when I'm programming this. You know, the traditional fast MACD is 6, 19, and 3. I have mine calculated on volume weighted average price versus the more traditional close price. And I find that VWAP price gives me a little bit more of volume confirmation rather than just using closing price. So that might be something you consider. Turn off all your filters and program in your fast MACD and go ahead and calculate it on VWAP. That's what I'm doing here. All right, so I like this. Let me check out the option chain. All right, I've got leaps. I've got normal options. This is good. This is good. Let's see, February 2025. I'm trading every dollar. Liquidity is okay. Nothing stellar, but okay. So I could do substitute options, but gosh, this thing is so inexpensive to begin with. The only time I would probably do a substitute option is if I had a cash account instead of a margin account. So if I wanted, instead of shorting a stock, which requires a margin account, if I wanted to keep this cash, I can see here using the $14 February 2025 put option as a substitute to having to short the stock. That way I could keep this in a whole cash account. I could see doing that. If I come back here, maybe looking at the November or the January options for, yeah, there's plenty of protective options, lots of liquidity on protect. Well, somewhat. Let me look at the January. Oh yeah, there's some protective options we could use here. I like that. So yeah, okay. So here's the plan. We're looking for a level of support around this $7.75, even $7.50. If we find a bottom, if we get our fast end of day indicator on the fast MACD calculated on VWAP, we could think about buying some of this in the form of stocks or buying some of that deep in the money far out in time call option. And then as it comes back up here to the $11 to $12 range, when it tops out, that's when I'll sell my call and buy my protective put. Buy your protective put down here, maybe at the $7 strike price. And then you just let time work for you. Every time you get a bottom or every time that premium option expires, roll out the protective option and then rinse and repeat, rinse and repeat. I bet it looks like you could probably get by with doing quite a few cycles on Inovio Pharma.
Yeah, and once again, the link to AJ's really spot on indicator is in the scroll bar. It's in the chat. Head on over there, download it. I know the team is working tirelessly week over week to improve it, to add some features. So if you haven't gotten access to that, it's very simple. Head on over to the link, sign up, and you'll get instructions on what you got to do next. All right, AJ, heading into the weekend. Looks like the markets are very calm heading into the weekend, kind of like you said earlier in the show, waiting for the next economic news, which is probably a nice breath of fresh air for investors this week to head into the weekend not having to worry about some really wild movements.
Yeah, I'm bringing back those moving averages. I'm curious whether today we're going to find out if this August 5th low close was actually our bottom, or if it's going to postpone that a little bit. So I'm going to take one more look at those two lines. Yeah, I noticed that since price has, even during the time of this phone call, since price has kind of moderated a bit, it's kind of flattened out. These 2 points, they were crossing a little earlier today. They're not crossing anymore. So I'm curious as to whether we get a signal that to a bottom, or whether it's, we have a potential next week to go lower.
All right. Well, we're going to be keeping an eye on that CPI number, right? I think that's
CPI and retail sales. Keep your eye on that. I think everybody wants to know that the consumer has their back.
And we are still getting some earnings, but most of the big players, it seems that they've already announced. Is that accurate? Or
yeah, there's still some companies out there, but for the most part, earnings season is drawing to a close, just like the Olympics.
Yeah, well, that'll be back to school season then, right? This time of year normally is pretty slow, but it seems as there's a lot going on in the economy, in the world, with the election. May not be such a doldrum August with opportunities to make some money, to invest. So,
hey, Sip, how many tickles does it take to make an octopus laugh?
1.
No, 10 tickles.
Tentacles. I knew that. I couldn't think.
Tickles.
I was thinking 8. All right. Well, that's AJ's joke of the week. Octopus tentacles and
10
they're
tickles.
tickling. I get it. All right, folks. Appreciate you guys tuning in. AJ's gonna be hitting the stage next week. Practice a couple jokes this week.
10 tickles.
If you've enjoyed the broadcast, please show some love. Hit that like, hit that follow, hit that subscribe button. If you have any questions on any of the things that we discussed, feel free to throw a comment in the comment section, or send us a DM, send us a chat. Head on over to tradingtrainer.com. Reach out there if you need anything. Otherwise, AJ, appreciate your time. Appreciate everybody tuning in. I hope everyone has a good, calm weekend.
Take care, everyone.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe